Hello guys, today we're going to talk about timeframes. Understanding timeframes correctly is very important and it's a very powerful tool for you to be successful in your trading. We're going to talk about what timeframes are, and in the end I'm going to show you how multi-time frame trading is done. So, what is a time frame? The time frame you select determines how much time is printed in every one of your trend bars in your chart. Let's go back to cTrader. I'm going to show you exactly what I mean here. We have plotted a EUR/USD chart. The time frame selector is inside the chart, is here. If we select 1 minute time frame, then each one of these trend bars is going to represent 1 minute of data. If we change that to 30 minutes, then each one of these bars represents 30 minutes. That means that the whole chart that we're seeing here is a lot longer period than the previous one, because if every bar represents 30 minutes, it goes back some days. If it's just 1 minute, it goes back to a day. So that is what time frames are. Now we're going to talk about the reasons why we use time frames. The most important reason to use different time frames is because the time frame that you use determines your trading frequency. If you have a trading system that has different entries, different exits, different technical analysis, this analysis that you're doing can be done on any time frame. So the trading system can remain the same, but by changing the time frames, you will change your trading frequency. I'm going to show you this in cTrader with an example. I've plotted here some charts, some EUR/USD charts. The first EUR/USD chart shows 8 ticks. So each one of the trend bars represents just 8 ticks. Let's assume that we have a trading system here, a simple trading system that we trade in the direction of the moving average crossover, and we enter on the lower Bollinger Band for an uptrend and on the high Bollinger Bar for a downtrend. So we're going to have one signal here, which is at 12th of March. Then we're going to have again a signal on the same day, then again a signal on the same day, again a signal on the same day, and it goes on, multiple signals on the same day. If we move to 5-minute charts, we're going to see that the signals are still on the same day. We have a signal here, for example, and a signal here, but there are far less signals on the same day. If we move to a 1-hour chart, still having the same trading system, we're going to see that we have a signal at the 27th, and then a signal on the 4th, and then another signal on the 6th. And you see that we have one signal per number of days. So we receive some signals in 1 week. And if we move to a daily chart, same thing, you're going to see that we have a signal per month or something. So what time frame should you use depending on the trading frequency that you want? If you're a scalper, that means that you're going to be trading a lot of times per day, and that you're getting a small amount of pips for each trade. You should be using tick charts, or you should be scalping trend bars that are up to 10-minute trend bars. If you're a day trader, that means that you're trading multiple times during the day, but you want to close all of your positions before the end of the day, before 12 o'clock at night. You should be trading from 1-minute charts up to 5-minute charts. If you are like a swing trader, trading some trades per week, you should be trading on 15-minute charts up to 1-hour charts, up to you. And if you're like if you're more long-term trader, you should be trading on 1-hour charts or above. If you're a trader that trades only a few times per year, then you can even trade weekly charts. The second important reason why we use time frames is because in trading, one very important principle that most of the traders follow is you want to trade with a bigger trend. So what is that bigger trend? How do you acknowledge it? You select what time frame that you want to use based on your trading frequency, like we said before. Then what you do is you go to some time frames higher than your main time frame, and you see the overall trend there. Then what you do is you go back to your trading time frame and you take only the signals that go with the direction of the higher trend. I'm going to show that in cTrader. We have the same charts that we have before here. We have a daily chart. We see that in the daily chart the trend is long. We can draw a trend line, we can have moving average crossover, it doesn't matter. So what we're doing is, if our 1 hour chart is our main chart for our trading frequency, we get the long term from the daily chart, and we only take the long signals in our 1 hour chart. So the next important reason to use time frames is to fine-tune your entries. This is the opposite of what we talked about before, of going to the higher time frame. Now what we're doing is we have our main time frame, which we get our entry signals, but however, to enter the market in the best possible price, we go to a smaller time frame and we do our technical analysis there to fine-tune exactly and pinpoint exactly the spot that we're going to enter to get the best possible price, the best possible scenario. I'm going to show that again in cTrader. Now in this case we have the 1 hour chart, and what we do is, let's say that we have we actually don't have a signal now, but let's assume that we have a short signal now. What we're going to do is we're going to go, even though the short signal is on the 1 hour chart, we're going to go to the 5-minute chart, which is a completely different chart, and we're going to do our technical analysis here. We're going to find our support and resistance levels, or we're going to draw our indicators, or we're going to draw our trend lines here, and we're going to find the most appropriate place to enter. We're going to get the best price. This chart is not a good representation of what I want to show you, unfortunately, because the price is spiking, but anyway, you get the idea. The final important reason why we use time frames that I want to show you is to get better exits. It's very difficult, especially if we're trend trading, to be finding good exits in our main time frame, because often when a trend is developing, there are no resistance levels. The trend is just developing. If we, however, go to the higher time frame, it's easy to find resistance levels, plot previous support and resistance lines, and look more data to see our targets. I'm going to show you that in cTrader. Actually, this time I'm sure I can show you what I mean. So I'm here on the M5 time frame, like I was before, and let's say that I've entered long to get this trend. But as you can see, the trend will just continue. I have no support, no resistance levels, no nothing. I have no exit. What I can do is I can go to the higher time frame. This is a 1 hour time frame, and now I see more data. So look, I immediately see my resistance here, and in this chart is just this resistance point. Some other chart is going to be a better signal even, but you understand the point. In the 5-minute chart, I have no exit. I don't know where I'm going. In this chart, I see more data. I can find my resistance point, and with another chart, I would have shown you better what I mean. Now I'm going to show you how you're going to put all these principles together in order to perform multi-time frame technical analysis and multi-time frame trading. Let's recap. What you do first is you select your main time frame for your main signals for your trading frequency. Then you select a higher time frame, and then you select a lower time frame. The distance between, some traders say that the distance between the higher and the lower should be equal, so equal distance between main and higher and equal distance between main and lower. But I would say that you should do whatever you want, find a time frame that suits better your trading style or your trading frequency, and you're going to do good. I'm going to show you in cTrader how to do multi-time frame analysis using more proper charts that I used before. So let's go to cTrader, and let's see here I've drawn 3 charts. My main chart for my trading frequency is the M15 chart, 15-minute chart. Then I've drawn my higher time frame to be the 4-hour chart, and my low time frame to be my 1-minute chart. So let's say exactly what we're doing when doing multiple time frame analysis, like we explained before. I start from the 4-hour chart, and when I do, I see the overall direction of a trend. The direction here is long, obviously. You see the trend is going up. I can also draw my trend line to get some trading signals, or I can even, it was a trend line that was broken, trend got weakened, or you can even use a multi-moving average crossover to show you the direction that you want to go. In this case, the slower moving average is higher than the slower moving average. Sorry, the faster moving average is higher than the slower moving average. so my direction is long. Like we said before, the fact that my direction is long on the higher time frame means that I'm going to get only long signals in my main time frame. So I go back to my main time frame and I can do the same type of analysis or do a different type of analysis to get my signal. It doesn't matter. But in this case, I've drawn a trend line and I see that my trend has just broken. So it's a very good place to enter long for my long trade. But I'm not going to enter just yet. What we're going to do is we're going to do what we talked about before. We're going to go to the 1 minute chart, a small chart, to fine tune our entry. So in this 5 minute chart, we have a very simple technical analysis and indicator. We just have Bollinger Bands. In order to get the best possible price for our long signal, we want to get it as low as possible. So what we do here is we see the places where the price is on the low Bollinger Band if we want to enter long, or on the high Bollinger Band if we want to enter short. So what I understand is this is a very good place to enter. So I can make a limit order here. And of course the band is going to be going higher as the price progresses, so I need to be moving my limit order, or I can make a robot that's going to automatically do my entry here. That doesn't matter. Or I can just wait for the price to reach the lower Bollinger Band. What matters is that I show you exactly the thought process. I find the higher time frame, then I go to my main time frame and I see my entry signal, then I fine tune my entry to my small time frame. And again, you can, like I mentioned before, use the higher time frame for your exit, because in your main time frame it's very hard to exit, especially in trends. However, on your high time frame it's very easy to understand a good exit. So this is a very good exit, for example, for your trade. You see that it's way below the previous high, so even if you have trend or if you have a range and this is the bottom of a range, you're going to reach that level. You can even close on the as a mean reverse here on the moving average. This is also a very good exit. You get a good risk to reward ratio if you put your stop loss. You go here, you put your stop loss below on your main time frame, you put it below the swing. You have 24 pips stop loss, you have a 101 pips take profit. So this is a cool trade. It may turn out good, we may make some money here. There is actually no limit on the amount of charts that you can use. Even though I strongly recommend using just 3 charts, using more charts is there is a good chance that it's going to confuse you a lot and you're going to have a problem. It's going to have the opposite effect. You're going to be confused instead of getting some value out of multi-time frame analysis. In this video we talked about what time frames are, so by now you should know exactly what a time frame is. I showed you how to do multiple time frame analysis. And just remember that multiple time frame analysis can be complicated for some traders. It's not something that you have to do. It's just another technical analysis tool which is very powerful if you know how to use it properly. Just remember not to be using too many charts. Don't get confused. Don't overdo it. Don't use a lot of charts with a lot of complicated technical analysis in them. It's not going to give you any more value. In the next episode, we're going to talk about chart patterns, and if you like this video, don't forget to subscribe, and if you want, you can share it with your friends. So thanks for watching.